let's get to what's going on with high-tax states. They are losing more and more people. We're talking high-tax states like New York, New Jersey. Last year, more than 5,700 high-net-worth individuals, they had liquid assets of more than $1 million. They pulled stakes and left, and they went to low-tax states. This is as IRS tax filing season is kicking off. It's in high gear. Why do they leave? Let's bring in attorney Rebecca Walser. Great to see you, tax attorney Rebecca Walser. Thanks for coming in.
Thanks, Liz.
So here's the thing. The Democrats are saying, tax the rich, tax the rich. The Republicans did it by pulling state and local tax deductions. Now Democrats are saying, hey, wait a second. We're losing our taxpayers from our high tax states. What's your take on all of this?
I think that this is the perfect way of highlighting that the free market works. We have a 50-state union, and people can choose to move where the tax basis is lower. And it also highlights, Liz, how high the tax burdens are in blue states. New York, New Jersey, Connecticut, Maryland, California, Illinois. It's really high tax policy in the state and local governments.
And that's the thing. Doesn't this show, to your point, that the market reacts? In other words, we hear Democrats talking 70% tax rates. People don't pay at 70. They end up lowering their income by doing things like tax shelters or just not paying it, right? I mean, doing tax avoidance. Go ahead.
Absolutely. And there's a difference between legal tax mitigation, which includes moving to a different state, moving to Florida, moving to Texas, living there half the year, and being able to claim that as your residency, and, tax scams and tax frauds. So we're talking about the legal, mitigation of your tax. We are economically responsible people. We will do what is in our best economic interest, Liz, and that certainly includes, having a residency in Nevada, Texas, in Florida over New Jersey, New York, to avoid the blue tax states.
I've covered the IRS and taxes for about 20 years at 3 magazines and a newspaper, the Wall Street Journal. I've testified before Congress about IRS reform. As a journalist, that was a weird position to be put in. When I see the debate in Washington again and again about raising taxes, it's always this fail-safe position that, this will fix income inequality. It doesn't. It just makes the government bigger. It makes the bureaucracy bigger. And when you have high tax rates, like in the 50s, there was a recession every other year. That hits the economy hard, right?
Yeah, Liz, there's this fallacy that the government actually has the authority and the power to create things through tax policy. The government creates nothing. They are a transfer of the wealth. And the people that create the wealth will do what's in their rational self-interest to protect that wealth. They will take the legal steps they need to take to protect their wealth. So we can't fix the world by saying, let's tax the rich. We, in fact, don't have enough money in the rich to tax and pay for all the government problems that we have and all the government programs. When
you have a bigger government, you got to get a bigger tax collector to pay for it. And that's what is never talked about. And here's the thing, Rebecca, here's another thing that's going on, and this is kind of weird. Let's switch gears, because this will likely get Maxine Waters in an uproar. We now have these no-income, no pay stub, unconventional mortgages, Rebecca. They're making a comeback. So if you don't have tax forms to prove your income, you can still get a mortgage. Is this a good or a bad thing? I think Maxine Waters, running financial services, she's probably going to do something about it. What do you think?
Yeah, well, obviously this got us into a lot of hot water with the housing bubble and the run-up right before the Great Recession. So, what we're talking about is bank statements being used to verify people's income instead of traditional W-2s. These are non-conforming, non-Fannie Mae loans. But what's really scary, Liz, is we had $12.3 billion of these loans last year written that were sold on Wall Street as bonds again. So we're starting to see didn't this happen exactly before? Right. And the lenders are trying to say that they've got tighter controls this time. But to me, it's like deja vu all over again.
Rebecca Walser, tax attorney. Come back soon. We love having you on.
Thanks, Liz.
Coming